Hello and welcome to another episode of Last Week Tonight, where we try to make sense of the world, one baffling topic at a time. Tonight, we're diving headfirst into the wild, wacky, and often confusing world of cryptocurrency in India. It's a topic that's been making headlines for years, yet remains shrouded in mystery and misunderstanding for many. Buckle up, folks, because it's going to be a bumpy ride. The journey of cryptocurrency in India has been nothing short of a roller coaster, filled with highs, lows, and unexpected twists and turns. Now, if you're wondering about the legal status of crypto in India, the short answer is, it's complicated. The government has been sending mixed signals, leaving both investors and regulators scratching their heads. See, cryptocurrencies in India exist in a kind of legal limbo. It's like walking a tightrope, where one misstep could lead to a fall, but the potential rewards are tantalizing enough to keep people going. They're not illegal, but they're not exactly legal tender either. This means you can't use them to pay for goods and services in the same way you would with traditional currency. It's like that awkward stage in a relationship where you're not sure if you're exclusive or just talking. There's a lot of uncertainty and a lack of clear boundaries. Think of it like this. You can't walk into your local chai stall and pay for your masala chai with Bitcoin. The chaiwala would probably look at you like you've lost your mind. The Indian rupee still reigns supreme as the official currency. It's the only form of money that is universally accepted across the country. However, you're not breaking any laws by buying, selling, or holding cryptocurrencies. This has led to a burgeoning market of crypto enthusiasts who see it as a new frontier for investment. It's a bit of a head-scratcher, right? The lack of clear-cut legislation has left many people confused and unsure about the future of their investments. The lack of clear-cut legislation has left many investors and businesses in a state of uncertainty. They are constantly on edge, waiting for the next government announcement that could change everything. On the one hand, there's the allure of this new and potentially lucrative asset class. The promise of high returns has attracted a lot of attention and investment. On the other hand, there's the nagging feeling that the regulatory rug could be pulled out from under their feet at any moment. This constant state of flux makes it a risky venture. The Indian government has been both a critic and a cautious supporter of cryptocurrency. There have been talks of banning it outright, but also discussions about creating a regulatory framework to manage it. News headlines swing between optimism and doom, adding to the confusion. One day, you hear about a potential ban, and the next, there's talk of innovation and blockchain technology. Despite the uncertainty, the tech community in India is buzzing with excitement. Blockchain technology, the backbone of cryptocurrencies, is being explored for various applications beyond just digital currency. Educational institutions are also catching on, offering courses and workshops on blockchain and cryptocurrency. The aim is to prepare the next generation for a future where these technologies could play a significant role. Families are having conversations about it at the dinner table, with younger generations often leading the way in explaining the complexities to their elders. So, while the legal status of cryptocurrency in India remains a tightrope walk, it's clear that the interest and investment in this digital frontier are not going away anytime soon. The future is uncertain, but it's also incredibly exciting. Taxes. The bane of every working person's existence, a necessary evil that we all have to deal with. Whether you're a salaried employee, a business owner, or a freelancer, taxes are an inevitable part of life. And now, with the rise of cryptocurrencies, even crypto traders have to face the taxman. Yes, even those who trade in the digital realm aren't immune to the taxman's reach. The Indian government has made it clear that they want their fair share of the crypto pie. With the increasing popularity of cryptocurrencies, the government has stepped in to ensure that they get their cut. In fact, the Indian government wants to make sure they get their fair share of the crypto pie. They have introduced specific regulations and tax laws to govern the trading and usage of cryptocurrencies. This means that if you're trading or investing in crypto, you need to be aware of these regulations to avoid any legal complications. So, how does crypto taxation work in India? Well, it's a bit complicated. The government has laid out specific guidelines on how crypto transactions are to be taxed. These guidelines are designed to ensure that all crypto-related activities are properly accounted for and taxed accordingly. Well, let's just say it's not for the faint of heart. The tax laws surrounding cryptocurrencies can be quite complex and confusing. It's important to understand these laws to ensure that you're in compliance and avoid any potential penalties. In a nutshell, any profits you make from trading crypto are taxed at a flat rate of 30%. This means that regardless of how much profit you make, you will have to pay 30% of it as tax. This flat rate can be quite high, especially for those who are making significant profits from their crypto investments. That's right, a whopping 30%. But wait, there's more. In addition to the flat tax rate, the government has also introduced other measures to ensure that they get their share of the crypto market. The government also levies a 1% TDS, tax deducted at source, on all crypto transactions exceeding 50,000 rupees annually. This means that for every transaction you make that exceeds this amount, 1% of it will be deducted as tax. This is in addition to the 30% flat tax rate on profits. It's like a little thank you gift for using your hard-earned rupees to dabble in digital currencies. The government wants to ensure that they get their share of the market, and these measures are designed to do just that. And if you thought that was the end of it, you're sorely mistaken. The tax laws surrounding cryptocurrencies are constantly evolving, and it's important to stay updated on the latest regulations to ensure that you're in compliance. The applicability of GST on crypto services is still a bit of a grey area. The government is still figuring out how to apply GST to crypto transactions, and this has led to a lot of confusion among traders and investors. It's like a game of regulatory roulette, and nobody's quite sure where the ball will land. The uncertainty surrounding the tax laws can make it difficult for traders and investors to navigate the market. It's important to stay informed and seek professional advice to ensure that you're in compliance with the latest regulations. Now, before you dive headfirst into the world of crypto trading in India, there are a few more things you need to know. And no, I'm not talking about technical analysis or blockchain technology. I'm talking about the wonderful world of compliance. You see, the Indian government is pretty serious about keeping illicit funds out of the crypto ecosystem. That's where AML, anti-money laundering, and KYC, know your customer norms come into play. These regulations are designed to prevent money laundering, terrorist financing, and other nefarious activities. So what does this mean for you, the average crypto enthusiast? Well, for starters, be prepared to jump through a few hoops when signing up for a crypto exchange. You'll need to provide valid identification documents, proof of address, and maybe even your grandmother's maiden name. Okay, maybe not that last one. In the realm of Indian crypto regulation, two major players are vying for control: the Reserve Bank of India, RBI, and the Securities and Exchange Board of India, CBI. These two institutions are at the forefront of shaping the future of cryptocurrency in India, each bringing their own perspectives and regulatory philosophies to the table. Think of them as the two cool uncles at a family gathering, each with their own ideas about how things should be run. One uncle is all about tradition and caution, while the other is more open to new ideas and innovation. This dynamic creates a fascinating tug-of-war that could determine the direction of India's crypto landscape. The RBI, being the big kahuna of the financial system, had initially banned banks from dealing with crypto exchanges back in 2018. This move was seen as a protective measure to shield the traditional financial system from the perceived risks associated with cryptocurrencies, which were still relatively new and poorly understood at the time. It was like grounding your teenage kid for coming home late, but instead of just taking away their phone, you confiscate their entire social life. The ban effectively stifled the burgeoning crypto industry in India, causing many startups and investors to rethink their strategies or even move their operations abroad. However, in a surprising turn of events, the RBI lifted the ban in 2020, allowing banks to dip their toes back into the crypto waters. This decision was a game changer, signaling a potential shift in the regulatory landscape and offering a glimmer of hope to crypto enthusiasts and businesses alike. Meanwhile, SEBI has been busy trying to figure out how to regulate crypto assets. Unlike the RBI, which focuses on the banking sector, SEBI's mandate covers securities and investments, making its role in crypto regulation equally crucial but distinct. They've proposed a multi-regulator framework, but so far, no concrete licensing regime exists. This lack of clarity has left many market participants in a state of limbo, unsure of how to proceed and wary of potential legal repercussions. It's like trying to fit a square peg into a round hole, except the peg is constantly changing shape. The evolving nature of cryptocurrencies and the rapid pace of technological advancements make it challenging for regulators to keep up, leading to a regulatory environment that is often reactive rather than proactive. As India continues its quest for clarity in crypto regulation, the interplay between the RBI and CBI will be crucial in shaping the future of this dynamic and rapidly evolving industry.